Welcome back on this Monday evening, South Africa Tonight. And economic growth figures are out tomorrow and could reveal that the country is in another recession. That's defined by 2 consecutive quarters of negative growth. The economy shrinking by 0.6% between July and September last year. Some economists believe the October through December number to be released by Stats SA tomorrow will be in the negative as well. Joining us, Chief Economist at Econometrics, Dr. Azar Jamin. Good evening to you. Before we get to the GDP numbers, I wonder if we could just start with the coronavirus very quickly. Figures out tonight say that world growth is set to slow down. How is South Africa going to be impacted if it isn't already being impacted by this?
You know, I think it is already being impacted by it. I was due to do a presentation in 2 weeks' time at an international conference in Cape Town and prepared for it, everything, and got a message over the weekend. There's 650 delegates who are supposed to come. We've decided it's too risky. We are cancelling the conference at this late stage. That means the convention centre, the hotels, the air flights, they're all are going to give way.
And multiply that 2-fold, 5-fold, 10-fold, which potentially could happen, and we're in trouble, given that we're likely to be in a recession possibly tomorrow.
Absolutely, that is the case. And the negative aspect of that is the less growth we have, the less tax revenue, the bigger the budget deficits, the more we have to borrow money.
Just back to the coronavirus very quickly. There's nothing really that we can do to mitigate, is there? We're held hostage, as is the rest of the world.
We are held hostage, and in South Africa's case in particular, the concerns are that our dependence on China as a destination for our exports means that a slump in the Chinese economy, which is clearly going to be the worst affected by all, will impact negatively on us.
So what type of exports would be impacted?
Your metal processing exports, which are prominent, and metal exports generally.
Let's focus on the GDP numbers tomorrow then. The median forecast among 12 economists polled by Bloomberg say that we will see a contraction of 0.2%. What do your models say?
I think we could eke out a positive growth rate, but it's a very close call. If one bases a lot of the analysis on the numbers that have already been released in terms of monthly figures for mining, manufacturing, retail, building and so on, we could just eke out a positive. A lot will depend on the numbers that we haven't had information on, such as government itself, transport and communications, financial services, and the agricultural sector. That's very volatile, and it's possible that we might get a nice upward surprise there.
Let's assume we don't. Let's say that there is a contraction, therefore we go into a technical recession. How does that impact on us, or is it simply an academic definition at this point?
You know, at this point, I think it's an academic thing. The fact is, whether we get positive or negative growth for the fourth quarter,
we're still on the back foot.
We're still on the back foot. And load shedding is at the back of our minds, and now coronavirus also at the back of our minds. It's not a great place to be in. And what is concerning a lot of people is that this does mean a fall-off in tax revenues and therefore needing to borrow still more money, and especially if public servant unions don't agree to what was presented in the budget, then we're in real trouble.
Let's get to the public service unions in just a moment, but back to load shedding very quickly. If we're to blame much of this on load shedding, our lived reality for the next 2 to 5 years is continued contraction, surely, given that this isn't going away anytime soon. That's on the record.
You're absolutely correct, Jeremy. The only difference is the load shedding that took place in December, I think, caught everyone by surprise, whereas now we are being primed to expect load shedding at a moment's notice and to be told to be ready for it. And we've got apps and everything in place so that we can possibly prepare ourselves.
So we've become a little bit more adept at managing the problem, which is a positive thing.
Yes, I do believe so. And, you know, if you compare the amount of load shedding we've had thus far in the first quarter of this year compared with the first quarter of last year, it's much, much less.
Very quickly to the public service unions. Government is now committed after last week's budget to curbing debt. One columnist was writing today that we're very good in this country at pronouncements. The question is, can we implement? Given the rough road that we're going to experience in negotiation with the unions, which has already started, I think.
Well, absolutely, because the question is, what do you do if you can't actually reduce the public sector wage bill? The answer is either you privatize state-owned enterprises to save money, or you raise taxes. And in each of these, you're going to upset one or other lobby.
It's very unfair, though. Labour analyst Terry Bell was talking to us a little earlier today, and it's seemingly ridiculous that hard-working teachers and doctors in the public service have got to pay for the transgressions committed by the government.
If one is to believe Finance Minister Tito Mboweni, they're not the people who are going to suffer. It's pen pushers who are going to suffer. How well government can manage that discrimination between who is really needed and who isn't is really very difficult.
All right, Dr. Azar Jammine, thank you as always.